Welcome back, everybody, to Fly the Coop. We have a question for you. Are you wondering how the interest rates and the volatility as part of may affect you? We have no better person to ask than the president of our company, Edina Realty, Sharry Schmid. Welcome back, Sharry Schmid. We are so happy to have you here today.
Thank you. Thanks for having me on again.
Oh, I love having you on because your insight and your knowledge level is so real, Sharry, and you have such a massive contribution to the reality of the market. So I'm excited to share you today with everybody. So you've got the stage. Fill us in on what you know.
Well, as we ask the question to the audience in and around interest rates, interest rates have here recently gone to a level that is media grabbing, attention grabbing from the standpoint of our news cycle loves a good headliner. So
They always
we're
do.
going to see, we're going to see and have seen that, interest rates, the 10-year Treasury went to its highest level here in a couple of decades with that. And what does all that mean? And it can sound alarming because that's what news is intended to do.
They
So I
want
would say
that to
this.
happen, actually. I don't know why, the grassroots fundamental foundation of what's really happening in the day-to-day lives, in the trenches, I call it, is so not equivalent to what the media is sharing. Not at all.
Well, and I would say this, as you look at interest rates, whether they're at, 7.5%, 8%, obviously that changes what your monthly payment is going to look like and what that's going to be. Steve Harney said it best in a recent podcast that you'd shared in terms of life happens and life happens, life goes on. And instead of focusing on that interest rate, it's really, getting with their real estate advisor to understand what does that mean for them? What is that in my life that needs to move on or to happen, or that my dream, my goal that I really want to have that occur? And how do I make that happen in light of the fact that, yes, here's where we're at with current interest rates. How do I make that happen? And then coming up with that 1 year, 2 year, 3 year game plan. And I say that because where interest rates are at today doesn't necessarily mean that's where they're going to be at in that 1 year, 2 year, 3 year time period. So
absolutely,
I would answer the question, Cari Ann, about, what do interest rates mean to me? It means that, again, set aside the media grabbing headlines and go get with your real estate advisor to understand what does that truly mean for me. Here's where I need my life to go, and how do I make that happen?
Absolutely. That's what we're doing. It's problem solving. It's solution based thinking is really the word I want to use. Solution based thinking. You do not let an interest rate drive your decision making pattern for your family and your personal life. That is not the solution. In fact, these interest rates have been much, 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 much higher in our lifetime than what we're seeing right now. The focus is entirely misdirected. And the fact of the matter is everybody needs to live a daily life and fulfill their own personal goal, their family need, their personal desire. And there's a way to readjust what that reality is, regardless of what the situation is when it comes to, in this case, interest rates. So in advising your team and the company, how are you advising the agents in terms of how they're communicating it? Because you're absolutely right. Circling back to Steve Harney, no better way to define what our responsibility is out there as the keeper of really important real intelligence. And it's not from social media, and it's certainly not from the news. It's from us. So they all need to learn and understand and really be educated on what's really happening. What are you sharing with them?
The advice in the overall direction is obviously an empathy toward, look, here's my financial situation, because it is important, right? I mean, that is a critical piece. So here's my financial component. Again, here's where I need to go. These are my goals, my dreams. This is, these are my circumstances that I'm either moving from or toward or both.
Right.
And how can you help me with the expertise that we have there, and we have all of that. And that's what real estate advisors are for. That's where our expertise lies. And this is where we really shine, is
Mhm.
to be able to provide those insights and give that. And what, what better job, and not even job or profession, but to be able to make that happen
Absolutely.
in light of the fact that, like I said, there's some challenges. I'm definitely, we're all empathetic to the fact that the financial components are real, and affordability has been a challenge, and a challenging piece. So with that said, a ton of success stories out there at
Mhm.
all different price points and price
Absolutely.
brackets. And that's the focus that needs to be had.
I
And that
agree.
can be challenging because, like we talked about, there's so much attention that comes from the news media looking for that clickbait.
Mhm.
And generally speaking, it's not positive. And
No,
that can be the hard part, is showing those positive pieces, and also not sounding like we're trying to be self-fulfilling with it. There really
correct.
are some great success stories out there.
There really is. And I think everyone needs to understand we did come off of an extraordinary appreciation over the last 5 years. So, not to confuse a market correction, if you will, a stabilization is the word I use, is an absolute necessity. Like that was not a sustainable growth pattern, right? It just isn't.
Correct.
So, what we've
Right.
got is we'll call it a correction, but as buyers, you're finding better value than you've had in a long time. And as sellers, you're still making money on your home. You still have a strong investment that you've been able to, whether it be sweat equity or otherwise, you're still able to see substantial gain. Maybe it's not the same outcome that you see your neighbors had 6 months ago or a year ago, but still very positive. So it's all on the light, like it's what lens are you looking at this with, and understanding the reality of growth as it relates to cost to live, right? So I just think it's a win-win. We're seeing amazing stories, success stories every single day. We're moving our inventory in a realistic period of time. Share with everybody what the average days on market right now is, Sharry, right here in the Twin Cities, because it's
You
impressive.
know, yeah, it varies. It can vary a little bit based on price
Price
point
point.
and geographically where you're at. But yeah, as a whole, and overall, it's averaging around that 40 day mark,
Mhm. Yeah, I
which
think
is,
45 days is the last I looked. That's
mhm,
great.
yeah.
That's
And,
great. Yeah.
and Carrie, and one thing I would mention too about comparing to what my neighbor did, and I didn't quite get the same upside that my neighbor got, because they're looking at it in terms of, I listed my home and I got this much more from my listing price 6 months ago. But the
Mhm.
reality is, you did get that upside because your price point didn't go down from their listing price. Your price point started from the offer that they received and
Good
closed on.
point.
And that's a big part that people miss.
Don't
They're
forget that.
comparing they're
Mhm.
comparing their offer to an offer from 6 months ago. They're not comparing apples to apples
Mhm.
with that. And I think that's an important distinction that we need to continue to talk through with
I
sellers.
agree. So give people an example of that. We'll look at a $500,000 home because it's a medium that's realistic for a large population, right? So 6 months ago, what did that look like?
Well, again, I mean, if you look at a $500,000 home and I closed at 500,000, but let's say that I initially went on the market at 450. I'm making numbers up at this point, and
Yeah,
I'm
I know.
making easy numbers up at this point.
Yeah,
So
but
at
it's realistic.
450, I closed at 500. But now
Correct.
let's say that today I'm listing with you and I listed at 500,000 and
Mhm.
I get 500,000.
That's
So somebody
correct.
would look at that and say, I didn't get the 50,000. Yes, you did.
Yes, you did. A lot of people
Yeah.
don't get that, nor is it communicated. It's a true
Yeah.
thing. It's a
Yeah.
real
And so
true
that's why
thing.
I want to point that out and call that out. And I think that is an important distinction to make.
I really do too. So, as it relates to the housing, we'll call it a housing crisis in the fact that we don't have enough housing. What is your perspective? Let's just focus on the city and then your take, because you're so involved on a national scale as well. What do you see as a forecast to allow the housing market to catch up with the growth pattern locally and nationally?
Yeah, and it's true in both cases, locally and on a national level. And we do have a shortage of inventory, and
We do.
there's a variety of factors that have played into why we're at where we're at. And right now, one of the components that we're watching is we are actually seeing our active inventory grow, albeit
Mhm,
slightly.
mhm.
And we'll see when the numbers come out here in a week or two, when David Arbitz puts out his numbers. I'll be curious to see, but at least in terms of the previous 30 days, we are seeing a small increase here locally in our active inventory. That's also true nationwide, but still puts us going into 24 at a deficit in terms of inventory. That's what's keeping the average sale price at where it's at, and even increasing because of
Mhm.
that shortage of inventory. So you look to, okay, will the builders build our way out of this? No, I mean, there's such a shortage that there's no way for them to build us
Totally
out
true.
as quickly. Yes. And in terms of, if we're talking 2024
Mhm.
and a spring market, it's simply not possible. The other thing, keeping inventory levels at current rates, some people do look at it and say, here's my current mortgage, and I don't want to let go of that mortgage for a different mortgage. Again, that comes
I
back to the beginning of our conversation of
mhm.
life happens. And you know what? I also don't want to be stuck because
No.
I'm moving to, or I'm moving from. I don't
Mhm.
want to be stuck. And that's where it's really important to understand, what does that actually mean? It may sound like a lot, but have you really done the math on it?
Done
And
the
maybe
math
when
on
you
it.
actually do the math on those numbers, it's not all that scary after all. And I think there's some of that too that's keeping
Absolutely.
people. And I think as we start to get some of that unclogged, we'll
Mhm.
see inventory start to build from that also.
I agree. So there's another piece of this, and you know that I really have a huge stake in the game in our empty nesting faction of the population, right? And I think a lot of people maybe misdiagnose the availability of inventory in the fact that there's a lot of housing ready and available. The seller who's an empty nester needs to be motivated or given the path of the next step in order to make that home available, right? So whether we like it or not, it is our responsibility as an industry to help through the psychology of that and help support that life move because they are ready. We're dealing with it every day personally on our team. There is a huge availability of inventory out there, but we need to give them the insight and the direction and the support systems. And when you're looking at such a large populace of agents, that's why I love about this company. 60% of the company's been around for 20 plus years or more, up to 40. We just had an event around this. The knowledge necessary to be able to help and support these people is very real. You got to know what you're talking about. It's a responsibility to understand what's happening in the market, what the interest rates really mean, what affordability means, and how do we seek out the inventory to support the need. So, what are your thoughts on that locally and nationally in terms of, shall we say, a dam? Because I don't see it breaking wide open. I see that being an ongoing issue for a long time, like
Yes.
10 years out.
Yeah. I do think the biggest thing is, and if you're listening to this and hearing what we're saying, and if you're in that mindset of, oh gosh, my interest rate again, 3%, but here's all the things I want to do and all the reasons why I want to make this move. And that's where I would strongly encourage you to reach out and talk to your real estate advisor, because like we said, the inventory, there isn't going to be this massive inventory that comes online. And
Mhm.
because that's not going to happen, prices are going to continue to stay where they're at, and they'll continue to appreciate.
Yeah,
And
they
so
will.
that's the part where you look at it and say, you know what, I do need to move on. I do want to live my life, and I need to be able to do that, and having that reassurance and that guidance
Mhm.
for what that looks like, where that can be, where you can make those dreams, those aspirations occur and happen. That's
Absolutely.
the part that I see moving forward versus all of a sudden there's going to be this significant supply of inventory that comes from somewhere. Again, like
Yeah,
like we talked about, to be able to build that, it logistically isn't even
that's not going to
possible for the
happen.
builders.
It's interesting, isn't it? Because a lot of people really feel that's what's going to happen. A lot of people we talk, I mean, I deal with it every day. I could be at the grocery store, I could be in a listing appointment, and they truly believe, well, there's no buyers right now. This is the wrong time to go on the market. We're going to have to stay here for another year or two because the market's crashing. And it couldn't be further from the truth, not further from the truth. In fact, Sharry, I think we've got as a company a graph that charts out. We'll just look at 2023. We're going to move about the same amount of inventory fourth quarter, if not more, than first quarter of this year, especially this year, because it was a late start year as a whole. What are your
Yep.
thoughts on that? And how would you advise both your real estate family, the agents out there that may not be aware of it, but also the client base that the timetable and the calendar aren't effectively driving our market like it used to? I think, especially after COVID, it changed quite a lot in terms of when you buy and how you buy. It is not a seasonal thing anymore. What's your take on that?
I would agree with that. Obviously the holidays can slow things down a little bit, but overall, I guess here's what I would like to say and try to convey. The real estate market and the stock market are not the same thing. And as much as people are always told who invest in the stock market, don't try and time the market,
Mhm.
don't try and time the stock market. I feel like we have this contingency out there right now saying, I'm going to time the real estate market. Well, there is no timing on the real estate market. The time is now. The time is, again, coming back to, and I don't mean to beat this to death,
Yeah,
but
yeah, but
the
it's
time is,
true.
this is my life.
Mm.
This isn't a stock. This is my life. This is my shelter. This is, where I am, whatever those goals, dreams, whatever that vision is, that's what's occurring. Trying to time that around any of the things that we're talking about, any of the experts, and I'll throw myself in that, who, try to tell you this is exactly what's going to happen. Nobody knows for sure. Nobody knows with, 100% certainty, but this part I do know.
Yeah,
There's nothing more critical than shelter besides food and basic
that's right.
components. And so you need to make those moves and make those decisions based on that and that solely. And then along with that, determining, okay, where and what can I afford, all of those elements, but
Hmm.
trying to time the market between a winter market, a spring market,
Doesn't work
that you
that
can
way.
you can find stats and research that would tell you anything basically that you kind of want to hear or that you don't want to hear.
Mhm.
So I would say what needs to guide is, what am I feeling? What do I really want to do and
Mhm.
need to do versus that comparison and what people are doing to a certain extent, like they do with the stock market.
I agree. So I'll use two examples and you can give your thoughts on each. So we'll start with the empty nester. Met these people, I've known them for 4 years. We met 3 weeks ago. They've been in their home for 33 years. Absolutely, we'll wait. We're going to wait. We want to find the right thing. Create the understanding of what the goal is. Be super clear on that. Go seek it out. That's what we train the team to do, right? That's our job, to train all the agents out there to support the client. When we did that, and in 3 weeks, they found that home. And it is an upsize. It's a negotiation. Price point 800,000. They've been in their home for 33 years. You put a support team around them. This will all
Mhm.
close in December, everybody. They've been in their home for 33 years. They did not think they were going to move right now. You put the counseling around your story, you determine what you want, and it's there for you. We will find it. Separate stories, an empty nester, but an entry level, 250,000, has to be priced correctly. It was listed by another broker. It wasn't marketed correctly. It wasn't priced correctly. We put the right price on it, still valuable. They're still profitable, sell in under a week. It had been on for several. So it's identifying what the why is, why you're making the move, putting a team around you and being counseled in a way, seeking it out and moving. And we will see a better flow of inventory, both for the buyers and the sellers, if they know that those resources are available to them, which they are with this team of people, with Edina Realty. I would say that story is much more, shall I say, there's a lot more of that happening right now, Sharry, than is spoken. And it's
Mhm.
moving very, very quickly right now. If you were to advise the viewers out there on what the next steps are over the next months and into next year, and to kind of set expectations, right? Everybody wants to understand what the future looks like. What would you say to them right now?
I would put it in, I back up a little bit and put it in context of this to those that are viewing. We have gone through, from a housing perspective, and I'm carving out that section, the broader economy as a whole. But when we look at COVID and what went transpired through COVID, and lots of people out looking for homes. And
Mhm.
again, we went into that with a shortage of inventory, and that goes into a whole backstory and history, but a shortage of inventory. So, an already shortage of inventory, we depleted it even further through COVID and people being home and wanting to do and to make those changes. So, that gave a jolt to the real estate industry.
Mhm.
We had record low interest rates at that time, again, so that fueled it. And then really, and quite quickly, the Fed needed to get a hold of inflation because that created a whole bunch of inflationary pressure across the
Wishes.
entire economy. So the
Mhm.
Fed pretty quickly started raising interest rates, which the result is what we're seeing now with mortgage rates. So for viewers listening to this, they're thinking, I've had all this back and forth and back and a lot of volatility over that time period within real estate.
Mhm.
What I'm trying to say with all of that is that's not typical for the real
No,
estate market. You and I
no.
have been doing this for a long time, and generally, and we like it this way, it can be pretty boring and
Mm.
it's pretty predictable. And
Mhm.
the phase that we're moving into is back to what I would call normal.
I
Pretty
love normal.
predictable, can be pretty boring. It's not going to have these high highs and be cycling the way it has with interest rates. I mean, that's really the part that has driven this.
Yeah,
Nothing else, nothing like what we saw back in and what people are trying to compare it to in 2008. This is
not at
solely
all.
driven by interest rates with the Fed and the
Mhm.
Fed funds rate, which indirectly controls what happens with mortgage rates. So all that to say, and over the next few months, what I see and what we look at is, and I welcome it, a return to that normalcy
You
for housing, which is steady, predictable, and
unpredictable.
not this high and low as it relates to interest rates.
Isn't healthy for anybody. Unpredictable
Right.
is not healthy.
Yep.
I think that people need to understand, the viewers need to understand that what we came off of was a lot more challenging. It presented a lot more challenges. And I think the buyers spent more money, and sellers, it was a little stressful for the sellers too. I think there was a lot of stress there on both ends. So the
Yep.
win-win for everybody, albeit unpredictability with rates, is it's still a solid rate. There is a lot of opportunity out there. Put an amazing team around you and you will seek out success. Be really clear about what you want. Remember, life is so short, and leading with positivity is always the best thing to do. And putting some really strong counseling that's super clear and grounded and is running in the trenches and really knows their stuff for real is the way to go every single day. Sharry, you're amazing.
Oh, well, thank you for having me
Yeah.
on. I appreciate our conversations.
I always love hearing your insight. You're a beautiful person, and I'm very grateful to have the opportunity. And we're excited to have you on again. When we move into 2024, we will have Sharry back in January, and I cannot wait. Thank you so much,
Looking for
Sharry Schmid.
looking forward to it. Thank you.